Sorry about that, ladies and gentlemen, but we had a technical difficulty. Something went completely wrong with the internet and it just disappeared off the face of the earth. I hope you like the new format. Here we go. Don't forget, trading's risky. Most traders do lose money, and if you don't like risk, then you probably shouldn't be trading. Don't forget that. Wow, what an interesting week. Besides all the markets going completely nuts and besides my internet going completely nuts, here we are. We're on. We're back at last. Whew, that was tricky. That was seriously tricky. But anyway, today I want to talk to you about how most traders try to be smart when they're trading. Most traders trade smart, but I do exactly the opposite. I trade like an idiot, as you know. If you don't know me by now, I'm Robin, and I trade as simple as possible. So we're going to talk about a little bit about that today. But how are you guys doing, man? How's everyone? I'm good to see you, and sorry I'm so late. It's crazy. I mean, I tried everything. My internet just sank. It just disappeared. Someone ran off with it. I don't know what happened, but it reduced down to something like 1 megabyte all of a sudden, and I couldn't get anything to work. So effectively, I just had to kind of find a way to reset everything. And I've got a kind of cloud system that works for me, and it's all over the place. And yeah, it is quite a large house, so it does give a little bit of issues getting from place to place. But that was a bit of a moment. Yeah. So I'm glad to see you all here. How's it, Elaine? Hi, Kevin. And Shakes first at internet. Yes, the internet went down here yesterday. Happens anywhere, anytime. Blame Trump. Oh, good idea. I'll blame him. Everyone blames him, so I might as well blame him as well, because he's easy to blame. Who's going to replace Trump? Come on, you guys tell me who's going to replace him. Let me know who's going to be next in line for that job. What a terrible job if you think about it. Markets have been rather volatile, but I always try and tell you guys that volatility is good. But when it's volatile, I mean, I wouldn't want to really be a 5-minute trader and a 1-minute trader when it's volatile. Now, a lot of 5-minute traders and 1-minute traders will tell you that it's a good time to be a 5-minute trader because, yeah, you've got markets moving up and down. But these insane swings, for example, even on the S&P 500, look at the swing we had on the S&P 500 here. Now, imagine that on a 1-minute or a 5-minute chart. Would have wiped you out completely. It would have driven you insane. So, well, you know, nice to be on a 4-hour. The nice thing about a 4-hour is the ability to sort of put your stop loss at a reasonable place, far away, and then set your targets. It leaves you with a lot of room. And if you leave yourself enough room during volatile times, you'll avoid this situation. You know, just put your stop losses in a decent place. Put your stop losses in an area where you know. Don't be greedy. Don't try and keep tight stop losses all the time. You know, because I know the closer you keep your stop loss, the more money you can make, right? But by the same token, the quicker you can lose it and the easier you can lose it. So do be careful of where you put your stop losses. Let me know what you think of the new format. If you want me to change anything, I will. I'm actually thinking of maybe adding some soft music in the background. I'll see how we go about that. I don't know, it might irritate you more than anything else. So we'll see how we go about that. Trying to make things fun, trying to make things different. And then the one day I change everything, the internet disappears and I can't start the show. It's half an hour late. I hope everybody still joins us and still comes on board. I'm using the Trump indicator, 70% win rate. Lovely. I like that indicator. That's a good indicator. The only trouble with the Trump indicator is you never know where it's going, up or down. It goes all over the place. It's like a flashy light. It's all over the place. I wish he would tell me before he says something, because then I could like make a choice quite easily. I mean, that's actually one of the things you got to do when you're trading, guys, is keep in mind that keep your ear to the ground. If something's happening, it'll give you good advice as to what's going on in the markets and whether you should be trading that thing or not. You know, just keep your ear to the ground. Don't listen to the small things, the jobs and the non-farm payrolls and the CPI and all that rubbish. That's just going to move markets up and down and drive you insane and give you a headache every week. No, the bigger things. Keep an ear out for the bigger things. You know, one of the big things I always tell you about is like this US dollar, Japanese yen, which I am now short on just about every account. And the reason for it is, and look how wide my stop loss is, 165, wide stop loss. And my main reason for trading this is not only the technicals. I mean, the technicals are in place. Let's accept that. Let's be fair. The technicals are in place. They look good. They don't look bad. So we're short. But at the end of the day, the reason I've put my stop loss so far out is because I know these things are very volatile at the moment. They're bouncing around. People are doing silly things. But also, as you know, my ears to the ground, I know that the Japanese government does not want their yen over 150 for too long a period of time. So the mere fact that it could reach 165 or 170, I mean, it's the market, it could do that. It's a possibility. But I know when it starts going up that way, they're going to start panicking, and they are going to step in, and they are going to try and stop it, because that's what they always do. They normally try and push it down from 160. So I'm quite surprised, but at the moment, maybe they're up against it with everything that's going on in the world and oil prices and all the rest of it. So it might be affecting things in an adverse way, because, I mean, if you look at the US dollar index has been a bit of a headache for everyone as well. What I have noted on the US dollar index is, look at this. We've got this trend to the upside in between the resistance and the support. Look how I trade like an idiot. I go short off the resistance and I buy off the support, and I check what trend it's in, if it's breaking trend or if it's staying in trend. That's how idiotically I trade. Forget about all the other jargon and all that important stuff and all those abbreviations and all those fancy things and printing and all the rest of it. I mean, who uses the word printing on a computer? I mean, it's a printer, for heaven's sake. So nobody prints anything anymore anyway. Everybody keeps things on the cloud, whatever the case. So let's be fair, printing is something of the past. So now we're printing on stock market. No, it's so technical for you guys. I trade like an idiot. I sell off the top and I buy off the bottom. Nobody can call the top and the bottom, by the way. But when I say I sell off the top and buy off the bottom, I'm looking at my support and resistance, obviously, and my trends. I mean, I'm not saying I'm actually selling off the top. I'm just looking at an area where every time it gets to that point, the institutional money's selling, or maybe Trump's buddies are selling. I don't know. Something's happening there. Everyone's selling. So why don't I join them and try and make some dosh while I'm there? But it's there, isn't it? So I might as well get in as well. That's basically what it's about. That's as simple as it gets. US dollar ZAR is finally going up. Finally, the ZAR is losing the value like it's supposed to. Because, I mean, really, the economy is going to get even worse now with the fuel price. And, yeah, for some reason or another, it's been strong. But it's mostly because of the US dollar, nothing else. Hi, Blue Mango. Good to see you. Liesel. Yeah. Bonnie Fatio. Aha. Possibilities for 5 minutes and go back down. Using Trump indicator. Yeah, okay, we're back there. Yes, everything's a possibility for 5 minutes and then it goes flying back down again. But I think the ZAR weakness will continue. I think, you know, there was talks today, and I mean, I mentioned it in the members video this morning with, you know, there was talks today about the truce between Trumpy and his buddies. And I don't know, this, you know, one says there's a truce and the other one says there isn't. So is there or not? I don't know. We'll find out. It's very difficult to call. The only thing you can really do in a situation like this is follow the money and see what it's doing. What's everyone else? What's the big money doing? Not what's everyone else doing. What's the big money doing? Retail traders, we retail traders think we run the market. We don't. We're like 5% of the market. The main market is in the big money, and the big money is what's moving these markets around. And that's why you're looking for these liquidity areas. Why do you think we look for liquidity areas? We look for liquidity areas because that's the area where all the big people are selling and buying. The only place where retail traders are quite strong is in crypto, because this is built up of one trader against another. But even that's turning to the point where there's large institutional money in this now, big time. So large institutional money is behind crypto as well now, and it's pushing things around. So you can see by the way it's moving suddenly as well, and the way it's moving around. But Bitcoin short today, that was my call today, short on Bitcoin. And you all know why I'm short on Bitcoin, don't you? Because, I mean, besides anything, if you take it to the day chart and then you have a look at it, there's a giant head and shoulders here, and that head hasn't played out. It goes down to 40,000, and the only time it's negated is when it breaks that shoulder. And I've told you this a million times. I'll tell you another million times. It's really important for you guys to get this through. To understand some of these patterns, you don't have to understand all of the patterns. If you want to know more about patterns, go to Google and download them. Advertising Google really doesn't make a difference to me. They own 99% of the market anyway, so I don't mind talking about Google. I'm not going to make any difference to them whatsoever. So yeah, Bitcoin definitely looks like it's short. I've been calling it short for a while now, and I'll only be calling it long when it breaks that shoulder. I'm very, very cautious. And there's another interim head and shoulder that's developed here, but it broke the shoulder on the side here. So that's not really that important. It's the big one you got to look at. At the moment on the 4 hour, it's kind of trading in this range anyway. So you can just keep it simple, trade like an idiot, sell off the top, buy off the bottom, easy peasy, and just look at what the trend is doing, as I always say, and see what's happening there. What else have we got on the cards for today? You all know I went long on gold, and it bounced me. I went long right at that point where it turned around. Of course I did. Who else would do that? I mean, just me, innit? So yeah, I went long because I don't wait for the retest. That's why. Most traders do wait for the retest, but this is not a line that it's actually bouncing off. It's an area. You can consider this to be an area, not just a single line. So even if it goes a little bit further, it should turn around. You see, I'll put my stop loss pretty far away and pretty comfortably away. So I bought gold with a view to it going to about 55, 5600. It might do that. It might not. Who's to say? And then we've got the German DAX, which is kind of falling by the wayside. Yeah. Doing its thing like all the other indexes, falling down. Okay, let's see what we got. I'm protecting my capital by sitting out. Kevin, you can protect your capital by sitting out. There is nothing wrong with that. And sometimes when things are tough and things seem difficult and you're not trading well, having a tough time, then sit out. It's a very good idea. I've done that a million times in the past. Like I said to you before, sometimes if I lose 3 trades in a day, I'll actually walk away and I'll come back tomorrow refreshed and we'll rethink the whole picture. But by the same token, don't be afraid of volatility. That's what I want to tell a lot of traders. Don't be afraid of volatility. When my title on this video is Trade Like an Idiot, and that's what I do. Volatility will bring you money, and all you have to do is move your stop loss out in volatility. In other words, when you take the trade and you make a decision, let's say you want to go short on this. Okay, so where would you put your stop loss if you go short on this? I don't even know what this is. It's the German tax. So I'd put my stop up here, way up here, past that high. That's a really long stop loss. It's far out. It's safe. It's way away. And I mean, if the price hits that, surely I'm wrong. And then just look if you can make a target down here. Is there a possibility for you to get back to 200 and maybe even make a one-to-one trade? When volatility is tough, sometimes you just got to trade one-to-ones and you just got to run on a different sort of risk structure. Just make the risk a little bit wider, make it a bit easier on yourself, and you still trade slowly. Even though there's a load of volatility, you still trade slowly. You see, the thing with volatility, what gets people is you sit watching charts all day. And the thing is, markets don't go in a straight line. So you go short, Trump tweets something and it goes long and you think, oh, I've got to get out. So you jump out of the trade. And then it goes short again and you think, oh, why didn't I get in there? So you get back in and then it goes long again. You see, because that's what markets do. That's how markets catch you out. They go short, long, short, long, short, long all the time. They don't go down in a straight line. They don't go up in a straight line either. They climb the wall of worry. And the wall of worry is up, down, up, down, up, down, up, down all the way. So remember, you're climbing a wall of worry here. This is not a straight up line or a straight down line. So when you trade the big picture. Look for the bigger picture. In other words, if you see a trade, look at it in the bigger picture as I'm going to put my stop loss way over there and I'll put my take profit way over there. I'm going to sit back. I'm going to watch this trade and I'm going to see if it plays out in my favor. Good, here, like a good example is this US dollar, Japanese yen. Sit back, relax, wait, see what happens. Yes, your daily costs. We can't forget your daily costs now, can we? They are going to whack you a little bit. You are going to pay more because you're waiting longer, but then you've got a wider win. So you've got to look at these things from perspective. Volatility is handy. It's not bad. Things move up and down. Don't get caught up in this sitting watching charts all day. and then somebody says something and it bounces the other way and it freaks you out, drives you nuts. You know, the only thing that's going to change anything for me in the markets this week is if they have a truce and they stop fighting and everything goes normal. Then there'll be some euphoria in the market and people will start to get excited and things will start turning around. Well, then that's important news. Then I should actually consider changing my trades and looking at things. But as things stand, what's the point? Nothing's changing. Everything's the way it is. So just stay the way with it. It is with it. Don't change it. It's just a way of looking at things. That's all. Just keep it simple and be simple about it. I mean, if things haven't changed, then why are you changing your trade? Why are you jumping in and out? You make a decision on a trade, and then somebody says something, and then you're like hopping out of the trade immediately because somebody said something. Yeah, that's a bit of an issue. So just follow your plan, and if it gets to your stop loss, you walk away. That's all you can do with it. You know, like S&P 500. If you had gone short here, right, and you thought, it's going well, 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 and then it bounces here, and you're watching the charts, and it does this to you. You're going to go, I've got to get out. I've got to get out of the trade. I've got to get. So you get out of the trade, and then it goes short again, and it just goes all the way down here, and could have made you a fortune. Be careful of that. Don't get caught up in that mess. The volatility is there, and you see what the way you must look at volatility is, rather than looking at it as a bugbear, look at it as when there's more volatility, there's a wider spectrum on these ups and downs. So just give it space, and then you'll be okay. And then if you do have the opportunity to trade the VIX, do so, because it can make you a lot of money. This made me a lot of money, so that's great. I'm out of it at the moment because I put my trailing stop on it, and it got taken out, but at a really good level, so I'm not concerned about that. That's one of those ones that I normally make quite a bit. I paid quite a bit for it this time as well. I was in it for quite a while, and I had quite a lot of fees on it. Anyway, like Finero goes short, 75,000 liquidation. BTC. Hi Rob, I've been watching your vids from the UK for a couple of months now and find them refreshing and very helpful. Keep up the good work. Thank you. Thank you for that. That's nice of you. Good to meet you, Forged Sparks. Thank you for that comment. Lovely. Ewald, hey, it's the guy with the biggest losing streak here. I'm trying to copy your strategy on the 4-hour. Sorry, I don't mean, I'm not laughing at you. I'm laughing with you. And I actually made some profit again, but I am wondering how far back you look for support and resistance. We'll go into that for you. You always have just 2 or 3 lines, so where do I place them? And I'll go into that for you now. Monthly is the big picture. It would be the trade of a lifetime. Yes, absolutely. All right, so I just want to help Ewald here with looking at the lines and stuff like that, because obviously that is a bit of a headache for, I suppose, everyone in the long run. You know, like where do you put your lines? How do you draw? How far back do you draw your lines? So what I do, this is for everyone, by the way, because I trade like an idiot. I don't get complicated. I don't overcomplicate things. I don't go into serious mathematical formulas and calculations and all this fancy stuff and give you abbreviations and all that. I keep it as simple as possible. And as you all said, you trade with like 2 or 3 lines. How do you do that, you know? So here we go. Okay, so what I would do, like the reason I put these lines in is because I'm showing you guys. Often I don't even put them in, right? Because I can just see where the area is. Now, but it does help to have them there, and if you do draw them in, it's not going to take much. But in the past, I used to draw the whole block in because it was like, it's important to have the block. So if you can, draw the whole block in. You know, that's basically drawing it from the top of the candle to the bottom of the candle and just drawing your block in on the support and resistance. And then you've got the general area that it can go into and out of. So it's probably a little bit better, but I normally take it to the day chart. And on the day chart, you get a bigger picture. And then I even make the picture even bigger if I can. Yeah, make it as big as possible so you can see what's happening. Now I'll take my resistance across the top. The area at the top, there's 1, 2, 3. There's quite a few spots there, where it's definitely a resistance at the top there. I'll say, well, that's the area, the prior high that it needs to break, the resistance that it needs to break, the area with all the things. And if there's some more at the back here, even better. And then I'll look at my support and the most recent. Look at it as the most recent, because there's no point. Look at it this way. There's no point in drawing your support down here. What's the point of that? It's going to take years for it to get there, isn't it? It's going to take 4 months or maybe a day. If it takes a day to get there, we're in deep trouble. But okay, you know what I'm saying. It's going to take a long time for it to get down to that point. So don't bother with that. Take the most recent support level. And the most recent support level is here, right? There's a support here. There's at least 3 touches there. Pretty decent. So you've got a decent support level there. And that's how you draw your resistance and your support in. And then you can make it bigger already here and just have a look and see if there's anything else you can see. I use candles on the short term, so I'm not worried about them in the long term for resistance and support. That line I draw in on the 4 hour. Then I take it back to the 4 hour that I'm trading on. If you're trading on the 1 hour, the 15 minute, take it back to that. But do be careful if you're trading on those lower time frames, especially during volatile times. My coffee's already cold because we had that issue at the beginning of the show. But anyway, so now on the 4 hour, you can clearly see that between that resistance and between that support, now you can't see all that rubbish behind it. That's gone, right? It's disappeared. It's not there anymore. But you can clearly see that there's a good resistance there. There's an area there where every time the price gets there, it comes down. Every time the price gets there, it comes down. Because there's liquidity there. There's big institutional traders. Think of JP Morgan sitting there waiting for you and sell, that type of thing. Okay, so they're all there waiting for you. And then at the bottom, there's some more further back. You know that because you put the line in. But that's just kind of like where the bottom is. You also know that you're very close to the support. So it's either going to break through that or it's going to bounce off that. But you know where you are now. But to determine which way it's actually going to go, because you don't want to take a trade at this point because you're really close to the support and you haven't broken through this trend resistance. That's why I draw this in on the 4 hour. You take this and you draw in on the 4 hour. And you draw it in on the 4 hour because you can clearly see where the touches are. You can clearly see where the shortest trend is. In other words, don't take the longest trend. It's going to take forever to get there. If you want to see it, then draw it in. But take these shorter trends. Then if it breaks past that and goes up, it's going long. If it breaks down past the support, it's going short. Those are the 2 trades you're waiting for here. Actually, no, there's 3. If there's a bounce up with a green candle off the support, it's going to probably go long. But it depends how close it is to that trend resistance, whether you're going to actually go long there or if you're going to wait for it to break through that level. You can draw like 3 of these lines in F1. If you want to draw a shorter one and a shorter one down here or a longer one up here, you can. I mean, if I draw the longer trend line in here, it's going to look something like that all the way up there. But are we going to wait for it to get all the way up to there before we make any decisions? No, we want the closer one. We want the closer one. There's plenty of space up to that one, so we don't need to really worry about that one just yet. We'll worry about that one when we get closer to the time. But right now, we don't need it. So pick the closest lines to you. Pick the easiest, closest lines to you and trade off of those. And as I've said before, like I trade like a fool. I trade like an idiot. I don't worry about all the technical jargon. I don't worry about all the rubbish and all the information that you get in the markets, all this stuff that they carry on about. Man, oh man, I've heard some interesting things. They don't do better than you or me. They don't do better than an institutional trader. They don't do better. Do you know that institutional traders, literally a high percentage of them, literally just use the RSI? I mean, Imagine that. There's all these guys out there with all this technical jargon and working this out and working that out and doing this, that, and the other. And there's this guy with billions of dollars going, ooh, the RSI is overbought. Perhaps I should sell. You know, that's basically it. I know it's insane to think that, you know, if as I've said to you guys before, if you want to do a test, take a person who knows absolutely nothing about trading and show them a bunch of charts like this, and then go into the charts and say buy or sell, and let them choose. And then they might say buy, okay, fine. And then they go to the next one and say buy or sell. They might say sell, and then just do that, and then and just pitch it against how you're doing, and you'll be shocked and stunned to find out you're going to have the same result. If you're doing bad, you're going to have the same bad result. If you're doing good, you're going to have the same good result. And do you know why? It's not because of these charts or this system. Charts can't predict the future. You and I cannot predict the future. All they can do is help you to manage a trade. How do you make your money? You make your money by managing the trade, by managing the risk, by trying to win more on your wins and lose less on your losses. If you suddenly get a runner, it's one of the most exciting feelings on earth when you're a trader, to get a runner. One of the most depressing ones is when you get one that's running against you. It's going bad and you're losing and it's just getting worse and worse and worse. You know the feeling, that one of, it's just getting worse. What am I going to do? That one, that feeling. Well, the opposite to that feeling is when you get a positive runner and it does the same thing. Now imagine that. Do you know why you don't get those? Because you trade out too early, because you jump out of your profits too early, because you run away too early. If you hold the trades according to your plan and you do things right, you'll have a couple of those runners. And those runners are like, the old days, sometimes we called them a 10-bagger when it was a small share and you bought it and it ran. I've had a few of those in my life. Those were great. But just normal runners. For example, you sold the S&P there and it went all the way down to here. What a great feeling that is. Do you know what a great feeling that is? It's insanely good. That, if you'd gone long here and it did that to you and you were still in the trade, that would be kind of the opposite feeling, wouldn't it? So all I say is that's how it works. And if that doesn't help you, just ask me again. I don't mind. Okay. I just put on the kettle for my coffee and I'd make a fresh cup for you anytime. I could do with a fresh cup. I'm just going to drink it cold. Okay, or on top of the CPU heatsink with metal cup, it'll be... My heatsink is inside the... Well, I've got a couple of boxes, but it's inside the boxes behind the fan, man. But if I had the heatsink out here, that would be great, yeah. It does have its own risks. Spill coffee on the heatsink, yeah. Yeah, no, that's... I've built a couple of computers in the past. I've got one, but I'm actually having to repair it now where the heatsink actually sticks out so you can't put covers on it. Quite big. But yeah, that one decided to give me a bit of a headache. I'm not going to mention names and things on computers and stuff that I like and whatnot, because that'll just be advertising for them, wouldn't it? Right. So I hope you guys are seeing this all okay with the new format with stuff on the left and whatnot, and it's helping you in some way or another. But for the guys who are watching on their phone, because you get two formats now, they're not going to see my face because I put my face on the left-hand side now, so you'll have to watch on a computer if you want to see my face, or on a TV. Right, okay. But that's okay. Nothing wrong with that. You can hear my voice, and maybe next time I'll play some music. Right. Just depends what type. What type of music do you play on a trading video? No, maybe I'll leave it out. Bad idea. Really bad idea. So the UK 100 just dropped below the 10,000. Did you see that? Well, it did drop below the other day, but now it's like dropping below again. This looks... Well, that's in the middle, looks pretty short. Look, it's a really good idea to trade like an idiot and just wait for it to get down to the bottom. But what you do have here on this UK trade is this, okay? And that looks pretty much to me like in the short term, it's kind of broken to the short side. It could be a good short if you want to take a quick trade. S&P 500 is very close to the bottom though, so be careful of that. And then NASDAQ was also pretty close to the, oh, it's on the support. There we go. Now, what I was talking about, drawing those blocks in. Okay, so what you can do is, let me just see if I can do it here for you. Instead of drawing a line, you could say, well, where's my area here? And you could just take the furthest one there and just go, it's actually kind of like there. That's kind of your area of support. In other words, when it gets into that area, when it's milling around inside there, it's in the support. And instead of looking at a line and thinking, oh, it's got to bounce off that line, it's going to be in this general area of support. So it's going to come into that and then come out of it. So if you want to be non-lazy like myself, you could draw these blocks in, and these blocks actually help you with that sort of thing. I used to do that quite a lot, draw the blocks in, but you know, you don't need to. For example, on the top here, where would the resistance be? Clearly, there's your resistance, right? What have I done? I've just drawn it from the top of the tail to the bottom of the tail, the bottom tail there, on that candle, on that top candle, and then I've just taken it through just to see where all the other candles are hitting. You see it came into the area, came out of the area, and you can clearly see where your area of resistance is. It's generally an area where there's liquidity, an area where there's something happening, an area where there's money. Don't look at it as an exact point. Like I said, if you trade like an idiot, then that's all you need. It's in there. I'll go short when it comes out of that. Perfect. No worries. That's all you're looking for. Effectively, you're not looking for much more than that. Effectively, that's all you want. And then you can take it back to the H4 and you can see where you are. You see, look at that. There's your area there. So if it gets into that, you can actually see it. And it just makes a nice, pretty color on your chart, doesn't it? These things just get in the way sometimes. You see, I drew it here on the Nikkei. There was a reason I drew it on the Nikkei. What do you think that reason is? It's because I looked at this and I realized there's a really wide band here. There's a really large area. Look at the size of that candle. There's a large area where the money's lying around at the bottom here. So there's quite a lot of space, and that's why I drew it in, because I thought, well, it's quite a thick band. So let's just see, you know, like where it is in that band, because in that band it can go either way, and you need to just keep an eye on it. But yeah, that's why I drew it in there. But generally, if it's very like double topish and very close to where it needs to be, then I don't bother with that. Don't need to. Oil is, see, there's the double top area. It did come down quite harshly, but it's bounced off the trend support and kind of moved to the upside. But that looks quite decent actually on a nice long trade. But I don't want to trade oil long at $100, to be fair. And also with the possibility of the odd truce coming around the corner, that could be quite disastrous for a long trade. So I would just sit on my hands and wait on this one. That's why I say keep your ears to the ground on fundamentals, because if you just trade what you see here, you'd go long. But if you know that oil at $120 is pretty toppish, because I've been watching oil for many years, and between $60 and $120, that's it. So if it's at $60, I'm buying at $120, I'm selling. Normally. But as things stood at the moment with the things that were going on, I was a bit worried about selling it at 120 this time, because I didn't know if it was going to go disastrously wrong and head up to 150 or 200 for the first time ever. But it does seem to have sat at 120 and started to come down, and there does seem to be some relief coming into the market. So we'll see what happens with that. Good morning, Investors Ed. Kevin just had to look up what a CPU heatsink is. Have you ever just placed limit orders at spots where you'd normally take a trade and track the results for a while? Yes, I have done that before. Many times in the past. I must say, generally I did it with shares when I was trading shares rather than just investing in them. I used to put a lot of limit orders in there. But, you know, the trouble I found with limit orders on indexes and commodities like this is you put a limit order in thinking, well, if it crosses that point, I want to buy it. And the problem with these things is when they get there, then suddenly the whole world changes and you've left a limit order in place. You know, be very careful of these AI trades as well, because it's very robotic the way it's traded. So that's why I say you got to have your ear to the ground as well. You know, if suddenly everything becomes euphoric and you've left a limit order in on the S&P 500, for example, and it spikes one way and it spikes the other way because it's euphoria and the truce has come about and everything's fine. And suddenly you're in a trade that you don't really want to be in, and it's moving at a speed in the other direction. So be careful of limit orders in that sense. Limit orders I found very useful for shares, for not for investing, but for trading, because companies tend to have a value move or whatever the case. So you can do that. But with indexes and commodities and Forex and that sort of thing, I'd rather just instant, that's it, done, take the trade, move on. If you're not around and you're working and you've got other things to do and you're busy plumbing or whatever the case, then yeah, you can leave an order in place if you think that things are going to stay as they are and you're looking for a certain price on the day. Then sure, of course, you know, nothing wrong with a limit order there. You can put them in and just take the order. Ooh, cold coffee. On the FTSE, I have support at 9690 and resistance at 10467. Let's have a look at that, Kevin. Resistance, yeah, well, pretty close. What's my resistance there? Oh, geez, 10470. What's yours? 104. Yeah, you did good. I mean, I just rounded it off, I suppose. And then support 96. Support here 9690. So it's a little bit higher, but you've put it. Yeah, you put it right there. Okay, look what I've done with the support here on the UK 100 hours. Look, day. Okay, look, I'll put the support a little bit further down, Kev, because you've put the support there. I get it, and the support can be anywhere between there and there. Okay, because that's your support. So if you were to look at your support, let's just do that. There's the top, 9664, 9660, 9690, okay. And the bottom, 9571. So you've got quite a wide range of support there. Okay, let me just take it out the way. So look at this. This is your area where the support's been hitting in the past, right? But also it came to the top, pretty close to this. Resistance broke through, came back, hit it, came back, hit it, came back, broke through a little bit, back up, came back, hit it again. This is an area of interest. This general area is interesting over here. So that's why I've put it a little bit lower than that. You've put it up here, but it, you know, there's a lot of space below that where it has moved. There's also this big piece here that it did break through. You could put a support down here as well, but it'll be a sort of secondary support further down. So if it breaks through there, there is another support further down and another support further down there. But at the moment, for me, the support is more around 9610, 9615. You know, that's kind of where it is, plus minus. You know, you've, like I say, you've got that whole area there. That's generally your support area, which is pretty much an area that it's going to go into on the UK. And so, yeah, that's pretty close to that at the moment, but it's in between the two. And if you take it to the H4, you can clearly see that it's breaking to the downside there. There's a good chance it'll come down all the way to that 9615 and then break and go back up again. Let's see what happens in the markets though. Let's see what the general consensus is, but there's a triple top up there. The actual level of, you see, Ewald was asking, resistance. There is a breakthrough at the top here, but it's very important to take the most recent and look at the most recent area, because it's going to go to the most recent area first. Then it's going to go to the higher area and the higher area after that. Move your lines around afterwards, but don't draw 20 lines on your chart, because you know what it does? It confuses you and it makes you hold back when you want to take a trade. Like, you want to take a trade? No. You want to take a trade? No. You know, because there's another line, another line, another line, and it's too close. And so just leave those lines out, because what it does is just works on your psychology too much. I have trade trend line, break, retest, and wait for another breakout. It works well for me. Passed my prop firm phase 1 and 2, and now I'm hardly able to take trade from the past 3 weeks. Okay, so things change, and things change in the market. I hear what you're saying, where you've now struggled for a few weeks, and you're trading with the same system, and you're wondering why it's giving you problems. Now, the main reason that it's giving you problems all of a sudden, and it was working just 3 weeks ago. 3 weeks ago, everything was hunky-dory, and now suddenly that system doesn't work anymore. What's going on? And then you go into the never-ending cycle of doom of looking for something new. Don't look for something new. Trend line breaks work beautifully, as I use them all the time. I just add my resistance in, my support in, and I put trend lines in, and if there's a trend line break, it's good. It's a trend line break. It's going to work. But why is it failing for you? You see, why it's probably failing for you is because you're relying on the system. You're expecting the charts to give you a win rate. You're expecting the charts to predict the future, and they can't. What you're doing is you're trading breakout. So in other words, you're trading breakout, breakout works. And then suddenly it doesn't work because there's only one reason, and one reason only, and it's you, okay? And it's your psychology and the way you've put things together. So if something stops working in your system, don't look at the chart. Don't look at the system. Look at the strategy. So what you've done with your strategy is you've, in all likelihood, in all probability, got your stop loss too close. You've got your stop loss too close to the price. In other words, you're probably looking at putting stop loss right on that area there. Just remember, if you put your stop loss right here on this spot there, okay, on that high, it's in all likely going to get taken out because it's going to head back and hit that price. You want to put your stop loss away from that high. And not only that, you want to give yourself room. And not only that, you want to be sure that if the price does get there, trade's no good anymore. It's worthless to me. I don't want it anymore. Look at those factors in your trading, and you might find that that's where you're going wrong. I don't know. I could be wrong, but that's in all probability, that's probably where you're going wrong. You see, it was working for you 3 weeks ago because it wasn't hitting those stop losses. Now it's hitting those stop losses. Now, I know that putting a smaller stop loss in allows you to make a bigger profit, but it also allows you to make more losses. So make less loss and win more on your wins, right? That's the strategy. But by the same token, when it's volatile like this, when volatility is high and you've got things going on in the market that are causing extreme volatility, you've got to move the stop losses further out and give yourself space. And as I said to you earlier on, guys, markets don't move down or up in straight lines. They go down, they go up, they go down, they go up, they go down, they go up. Because you see what happens is you go short here. At this point here, right here, you go short. So, it's a short. Look at that. Pincer top, red candle, short we go. And it goes short, gets down to this point, and you're watching charts all day. And it goes green and it goes up. And you've got to put your stop loss right there on your cost, on your line. Okay? And it goes up, boof, takes it out. Oh, you're out of the trade. You've lost. And you're like, why? Or you saw it going up and you're like, oh, it's going the other way. And you got out of the trade. And you just get out of the trade early or whatever the case, rather than waiting, because it's just retesting basically. And then it goes along and look where it comes down, huge profit. You see, markets don't go down in straight lines. They go up and down. They always go up and down. That's a funny thing about markets. They don't just go in one way. Look how far out I put my stop loss on that. As I said to everyone earlier, stop loss is miles away. Because I know that this thing's volatile. It's going to go up a bit and come down a bit, and there's going to be stories behind it. Leave it. It's going to work out. Give yourself space. if your system starts to change, don't look at the system. The system's worked, and it's worked for you in the past, so why would it stop working now? The system's working. All that's changing is the strategy. In other words, suddenly things have become volatile. Why am I suddenly losing? Oh, I'm getting stopped out quickly. Why am I getting stopped out quickly? Oh, my stops are too close. Or I'm jumping out. Maybe it's me. Maybe I've got fear and I see the market turning around and I jump out of the trade too early. It's always you. It's not the system. You see, the thing with systems, they can't predict the future. Charts can't predict the future, but every system works. Every single system works because as complicated as they can get, like I said, I trade like an idiot. I like go short off the top, go long off the bottom, go trade on breakouts, and that's it. Okay. I don't get complicated. I don't talk about printing the market and this and that and the other volume profile and all this rubbish. I don't go there. I just like take a trade when it's available. It's simple. You can get complicated as you like, and it's not going to change anything. Only thing that changes is here. It's all up here. It's all in your mind. You see, every single system on the market works because every single trader trades with the system. And as I said during this live show, institutional traders, pros, many pros, trading with millions of dollars, okay, billions of dollars, simply trade with an RSI and nothing else. Sometimes they don't even draw a line on the chart, just RSI on the chart. That's all they got. Yes, but they do have one thing and one edge that you don't have, and that is they got information way ahead of what you have. Maybe they've got a listening device in Donald Trump's office. I don't know. That would work, wouldn't it? Okay, so keep that in mind when you say, you know, I trade trend line break and retest away from it. It works well. And it stopped working. If your system stops working, don't change the system. Change how you're looking at the trade. Because remember, it's not about the lines. It's about you. Okay? Yes, 8cap is suited for swing trader and holding for nights and over weekends and even through the news. It's actually quite nice. And they've got CFD, they've got these daily challenges, and they've got the normal challenges as well. Quite decent. That's why I put them on there. I'm speaking to the people there, and that's an affiliate, by the way. So, you know, there's a discount offered for you there and all the rest of it. So I've negotiated that with them. But yeah, they're not too bad with that. They're quite decent with that. And if you want to go for that. Okay. What are you saying now brings me to the following burning question. Why wouldn't you just place an order at the stop loss level then? Now that's an interesting one, Evil, that you bring up there. Why wouldn't you place an order at the stop loss level then? There was a chap that used to live in South Africa. He's unfortunately passed away now. He used to be a good friend of Tom Hugott's. And I can't remember his name now. Somebody will bring it up here. But his actual philosophy was, interestingly enough, and I remember listening to him and thinking, wow, that's quite interesting. And I think someone taught him that as well. Is if you take a trade and you're thinking of taking a trade and you're looking at putting your stop loss there, they used to say, no, don't take the trade yet. Wait for it to get to your stop loss and then take the trade. That was actually a philosophy that they came up with. I did try that once or twice, but unfortunately it doesn't always work. You know, it doesn't work out, especially if you're putting your stop loss in the correct place. But if you're putting your stop loss in the incorrect place, it works. You know, if you're putting your stop loss too close, or if you're taking your trades too early, something to that effect. If you look at a trade and that's what's happening to you, then when you want to take a trade and you're putting your stop loss in place, don't take the trade. Wait for it to get to your stop loss and then take your stop loss from there and go. So yeah, well, yeah, what you said there is totally right. Yeah. That depends, you know, I got a comment here, but then swing trading will take too much of the profits due to swap rates, isn't it? Depends on your broker, depends what you're trading, and it depends probably if you're trading funded or real cash. If you're trading real cash, nah, you'll have no problem. I've never had a problem trading with my brokers here in South Africa where I've had to pay too much swaps for my accounts or anything like that. I did, however, notice that with the funded accounts, that is a bit of an issue. Some of them are quite expensive, and if you leave the trade in too long, it can be quite costly, but never as costly as the profit you're making at the end of the day. But yeah, I get you on that. But if you've got decent cash accounts with decent brokers, and if you've negotiated your fees, then you won't have an issue with that. I've never suffered an issue with that with a cash account. Yeah, I have paid. Yeah, I've paid holding trades for a long time, particularly VIX and stuff like that. But never have I lost on fees. Never have I lost money on fees. Never. I've always lost either on the trade, or I've made enough profit on the trade that the fees are negligible. Okay. So, but I did notice that on some of the funded accounts that I tested out and checked out, played around with, that some of the swap fees or some of the fees were a little bit over the top. So that's something you have to look at, something you have to decide for yourself. You see, the reason they do that is because they want you to trade on the 5-minute charts. If I can get you to trade on 5-minute charts, I can get you to lose money. And if I can get you to lose money, I can get you to buy more accounts off me. And I do believe that many of the funded accounts, this is how they make their money. So, that's probably, I'm surmising here. And I'm not stating a fact, because I'm not there in every prop firm, and I'm not there watching what they do. But I have this sneaking suspicion, as I've told you guys all before. About a year ago, well, let's say 2024, I had no time for prop firms. I thought they were all scams and rubbish and a bad idea and all the rest of it. And then I realized that they've got a place in the market, and I warmed up to them. And I realized what their place in the market is. On dealing with you guys, that's why, because I found so many people that just don't have the capital in the market to actually go out and trade and make money. I mean, if you've got $1,000, you are going to struggle to make money in the markets. You really are. You can grow it. You can grow it into something, but you really can't do much with it. So this is where I found that the funded market industry, prop firm industry, came into their own, and they're quite useful for traders who don't have large sums of money to trade with. Also, what they do is they set a nice area in between demo and your real money, so that you can learn whether you can actually handle the fear of trading and putting real money in the market and stuff like that. So there's a nice gap in between where you get a learning curve, because if you lose a funded account, you lose what you paid for it. Whereas if you lose your real money, you're kind of sitting on the bus stop looking for somewhere to nap. So there's a big difference. There is a massive difference. So it's a good thing to learn on the funded accounts before you put your pension into the markets. That said, I still don't know that they would prefer that you trade longer time frames, because in most cases they do make their money out of you buying funded accounts and challenge accounts and things like that. The reason I've negotiated a little bit with 8cap and whatnot is because they do also have normal CFD accounts and proper brokerages and things like that. So maybe they're a bit more legit. It's up to you, check it out. But like I say. So I recently took an oil trade on 1 hour, and then despite making good profits, all was wiped off due to swap rates and more. The 8caps, their swap rates don't look too bad, to be fair. I held the VIX for quite a long time with them, tried them out, and it didn't cost anything. They don't look too bad. Testing them out wasn't too bad at all. But I still prefer the cash accounts with everything. The cash accounts don't cost you anything, and they're kind of more free, and well, they cost you money, but 0.2%, 0.0%, 2% in that. It's very small. It just depends which company. Try them out. Tywald, good to see you, man. That's the end of that cold cup of coffee. That it actually went cold because we started half an hour late. And we started half an hour late because the internet went insane. And I don't even know why it did that, but it did. It just went completely crazy on me. I couldn't get it to work. Tell you what, if I was a youngster, it would be so much easier for me. But I do know a lot about computers and that and internet and stuff. But yeah, just frustrating. So we started a bit late. But at least it's working now and it's doing its thing and doing what it needs to do. So when you guys see me say, I trade like an idiot, you know what I mean, eh? Just easy stuff. Sell off the top, buy off the bottom, look for breakouts. We trade three ways, right? We trade three ways. For those of you who don't know me, we trade three ways. We trade with the trend. So if there's a trend, we trade with the trend. Then we trade in a range. So the range is between the resistance and the support. It's up, down, up, down, up, down. So sell off the top, buy off the bottom. We always put the resistance and the support in if we can, which is 99% of the time. And then we trade breakouts. And breakouts are, it either breaks out to the top or breakdowns, is the same thing, break down to the bottom. Or if it breaks a trend, that's a counter trade. So that's the three ways that we trade. And that's it. I trade like an idiot. That's as simple as it gets. I trade like a fool. I mean, really. All this, why are we overcomplicating stuff? Why are we putting so many different things in? Traders tend to try and make things complicated and keep themselves busy by creating all kinds of little spreadsheets and goodies and ideas and mathematical formulas and abbreviating everything. And it doesn't make you money. It just doesn't. The money's all made in a simple strategy and a business plan. And the charts are there for fun. I used to sit with so many computer screens up there and watching Bloomberg and CNBC and loads of indicators on the charts. Lines, I had lines everywhere on the chart as well. Oh, goodness, so many lines. And at the bottom, the MACD, the stochastic, the RSI, the volume profile. There were so many profiles that the chart was half the size. Come on, guys, really, it's, I just cleaned it all out, and left myself with a blank chart and said, let's start again, and which is what we did. And it definitely changed my life. The other thing I did was stop watching charts all day, because I did do that. I used to sit, I lived, ate, and breathed with the stock market for a long time. And, I realized that you can't do that. You just can't do that, because imagine this now, and you doing it. You're trading all over the world, right? And when you live in a place, not America, for example, you live somewhere else, you find that you're out of time zone to everyone else. So you find yourself, when you're watching charts all day, you're sitting trading during the day, and then you decide, no, okay, then I'll sit with my family looking at my phone and just checking the trades, because it runs until 11 o'clock at night for me. So now you're sitting trading from early in the morning till 11 o'clock at night. No matter what you do, no matter how you're trying to get away from it, you find yourself sitting with friends in restaurants or at pubs or whatever the case, looking at your trades. And that's just insane. Or in the shops or at the beach. So yeah, at that point when I cleaned it up, I realized, here's the thing. Clean it up, take your trade in the morning, look at what the markets are doing, put your positions in place, risk management, take profits, that sort of thing, leave them in place. Yes, you're advertising your trade, of course. You put it in the market, you advertised it, for sale here, what can you do? But you've put it in. Go away, relax, enjoy your day. Come back, check it out when you can. Don't sit checking it out all the time. Don't sit looking at your blooming phone all the time. It's going to drive you crazy. Just let it go. Just take your trades. You know, you did this because you want to get a better life, right? And how are you going to get a better life if you're stuck watching charts all day? How are you going to get a better life if you constantly concentrate on it, or stressing about it, or worrying about it? And forget about the 5-minute trick of 5-minute charts, come in, trade for 2 hours a day at the open and make $200 every day. I've told you 100 times, that's not going to work either, because you're going to come in and you're going to watch charts for 2 hours and you're going to take these trades and you're going to lose $400 instead of making $200. So how much money do you need to make the next day? Surprisingly enough, you need to make $800 the next day, not $200. Work it out. So don't do that either. So just take the trade, leave yourself lots of space, go slow, H4, nice and comfortable. If you want to go H1, you can, but put your trades in place. Leave it there. Go and enjoy yourself. Try and enjoy your life. Try and have a bit of fun. You know, you don't need to sit and watch these charts all day. And that's how I found the time and the space to make these YouTube videos for you. You know, all through my trading career, I've managed to do other things and keep myself busy with other things as well. I haven't needed to just sit and watch charts all day. In the beginning, I did. Believe me, I did. That's what woke me up. But after that, I've had a lot of time just to myself, and gives me time to do other things. And the reason I'm actually doing the YouTube stuff with you guys at the moment is to make sure that I'm not bored, number one, and to have a bit of fun, and because it's something for me to keep me busy, because I can't keep myself busy trading. It's not going to keep me busy. Investing is easy. I just every month, once a month, sort of decide what I want to add to. And trading, pretty much, as you know, it's a couple of hours a day. The rest of the day is up to me. So I'd like to keep myself busy with something, and I don't really at my age want to start another business or do anything like that anymore. I'd rather just have fun with some YouTube and have the excitement actually of growing a YouTube channel. You know, it's actually quite exciting. It's about as exciting as succeeding with trading. You know, if I succeed with this, then it's another tick on the box, you know, another bucket list tick. Yeah, you did good with that as well. Yeah, that's not as easy as I thought it would be, though. No. Okay. When do you dare to move the stop loss into profit? Were you able to handle your losses right from the start? Two wonderful questions, two great questions. When do I dare to move the stop loss into profit? What I prefer to do with the stop loss is, let me show you on something that's tradable. What I'll do is, for example, US dollar, Japanese yen, let's say we've got $1,000 risk, okay, let's say, and you want to sort of like move it in. What I would do is I would wait until the profit is about 75% of one-to-one, sort of like $700, $750 in and doing quite well. It's almost halfway normally. And say, all right, now I'm going to take my stop loss and move it up to cost, or just a few bucks in profit or whatever, to cover the swaps, or as they call it, or fees, and leave it there. Then the trade is free. Now you're not paying for your trade anymore. You see, every time you take a trade, whatever you've decided that your stop loss is, let's say you've decided it's $500 or you've decided it's $1,000. And the big thing to understand is when you take that trade, is that's what I'm going to pay for that trade. This trade is costing me $1,000. That's it. Okay? No matter what happens, and then put that in your mind, it's costing me $1,000. It's going to cost me $1,000. When it gets into a reasonable profit, about under one-to-one, like 75% of one-to-one, say $700, $750, you go, okay. And also look at the, the market and how things are going, and if it looks viable. Then you take your stop loss, move it up to cost. Then you say to yourself, now that trade's free. It's costing me absolutely nothing. I can't lose anything on that trade. Now I'm happy. Now it makes me profit. And then when it starts going up and up and up and closer to your profits, then you can start moving that up behind it in a sort of linear way. Keep it along the same sort of gap. keep the same sort of gap behind it. When it gets really closer to the profit, then I actually like to move it sort of maybe $500 if it's $1,000 risk, and really close, 250, 200, and right up behind it, I'll even move it up to $150 behind it. If it comes back and takes it out, I've actually made target. If it goes past and keeps on going, then I'm like, ooh, it's making money. Then what I'll normally do is leave it there for a while, let it build again, and then push it up further or add to the trade, or depending on what the trade looks like. And then, were you able to handle your losses right from the start? No, absolutely not. And that's why I tell you guys in these videos, I'm not telling you how to trade or how you should trade or what you should do. I'm actually letting you in on my experience. I'm letting you in on what I've been through. So I'm not here to boast about how much money you can make or how much you can make on a trade or how you can do a trade or, I made millions here or I did this there or that BS or whatever the case. No, I'm not that person. I'm not that guy. I'm not going to be that guy. But I can tell you what I've experienced. And yes, Evolt, I was not able to handle my losses from the start. I sweated more than any of you. And believe me, all traders have gone through the same thing. All traders have gone through that all these different mistakes that we make and all these things that go wrong in the market. We've all experienced it. We've all done it. Don't think because somebody's been there, done that they are somehow different. No, we've all been there. Now, believe me, I've seen my money heading down the toilet, looking at the charts, thinking, oh, sweat, like I've been through that fear. And that's why I know about it. I know that feeling. I know what that feeling is like. So that's why I'm here telling you about what it's about. How do you overcome that fear? Well, the big way to overcome that fear and the easiest way to overcome that fear, well, firstly, you have to learn that you are going to lose in the market. But before you get to that point of learning that you are going to lose in the market, learn what your threshold is. So, for example, if you can risk $1,000 and lose $1,000 and it's nothing, it's okay, I don't mind, you're in a good place. But if you can't risk $1,000 and it's getting to a loss of $1,000 and you're feeling the pain, you're feeling the sweat, and you're starting to shake, then you've risked too much. So what you need to do then is reduce the risk, make it smaller, take it down, try $500, see how that goes. And if it's still too much, reduce it again, try $250. When you get to a point where you feel, oh, that's easy, that's okay, I can deal with that, I'm okay with that, then you can try and push it up a little bit again and just see, where's your threshold? Where's your comfort zone on the losses? But then when you realize that the strategy will always win, when you realize that if you take 18 trades at $1,000 risk per trade, so you're risking $18,000, the first thing you have to ask yourself is, if I take all 18 trades, can I afford to risk $18,000? But would you lose all 18 trades? Well, you never know. But let's say, statistically, as we always say, you win half of them and you lose half of them, and you've risked $1,000, but you've applied the strategy where you've kept the risk the same, so you've lost $9,000 on the 50% that you lost. But because you applied the strategy of targeting the proper targets, that they averaged out a 2-to-1 risk to reward ratio, so you made $18,000 on the winning trades, which overall gives you a $9,000 profit, if my maths is correct, which it probably is. Now what I say to you is, now that you understand that, the loss doesn't matter anymore. So now you can start risking larger amounts, knowing that if I risk $10,000, I'm targeting $20,000. If I risk $5,000, I'm targeting $10,000. So as long as I'm making more on my wins, and I'm going to make more on my winning trades, then the risk doesn't really matter. And once your mind gets around that. And the only way your mind's going to get around that is when that actually works, when you actually start to see the result. That normally takes some time. Now, if you're targeting daily results, hourly results, I want to make a profit quickly, then you're not going to see those results quite so easily because you're trying to get a quick profit. But if you've got an annual plan and a slow plan and you're looking at what you can make over time, then you'll start to see those results and you'll start to see, well, hang on, the account's actually growing, even though I'm taking losses. And then you start to see the fruits start to come in, and then the losses start to negate. The only thing you have to understand, though, is that you have to keep the loss the same on every trade for you to make a profit. That is insanely important. Very, very, very important. Otherwise, you're going to have a problem in the markets. There's gold starting to come back. Yay. Okay. The fifth element is here. Ooh. Absolutely marvelous. Yeah. So, yeah, we did start rather late today, though. Interesting. Next time, must consider some music. Why not? Right. Bitcoin is going short. I did call it short this morning. I did say to you guys, Bitcoin's going to go short. There it goes, go short. Watch it go long now. But let's put the trend line in, the long-term trend line. Now, what I was saying to you guys earlier, especially, well, saying to you, you get these long-term ones, and you can also put the short-term ones in if you want to. So, you can put more than one in. You don't have to only have one. It's just me that's being me that puts only one in, because that's just the way I am. Okay. NVIDIA used to be your safe haven. Is it still the case? No, it's not my safe haven. It just happens to be one of my investments. And the one thing you got to understand about me is my trading is completely separate to my investments. And my investment account is a 30-year account, just less than that. But yeah, it's an account where every month it gets a bit of money, and it's an account that grows over time. Sometimes a share gets added to it through the years, sometimes not. Some get taken out because they look bad, and then the money gets replaced with something else. This is why I don't trade shares anymore, is because it interferes with my investing. Because when you're constantly concentrating on trading and trading shares, then you start to think, maybe I should sell that investment. I don't do that. I haven't even looked at the NVIDIA price. You could tell me what it is. I haven't looked at it, because I invest it once a month, I throw the money in it, and I leave it. Because the one thing you cannot do is call when to sell and when to buy on a stock. You can trade it like we do here on the indexes, up, down, up, down, up, down. But when it comes to investing, the trick to investing is you buy it and you set it and you forget it. Unless, of course, it's going really pear-shaped and the word bankrupt or fraud comes up in the conversation, then you need to look at that stock and say, well, maybe I should get rid of everything and replace it with something else, because otherwise I'm going to lose all my money. But when it comes to investing, you just look at your portfolios and you look at the stocks that you've got. You say, I want to add to that one this month. I want to add to that one this month because I've got some spare cash, and just put it in there. You leave it, you sit and forget it. If you work out how much money it grows to over time, you will fall flat on your back. I have a video in my system, go and look for it, about investing. Go and watch my calculator on what you can make over 10 years, 20 years, and 30 years. If you just started on like 100,000, 20,000, whatever the case, you'll be insanely shocked at how that grows, okay, over that period of time. You see, the market goes up and down. Where's the S&P 500? The market goes up and down. The market doesn't go up in a straight line. It goes up and down. Goes up, down, up, down, up, down, up, down, up, down, up, down. But that's your S&P for the recent period. And tell me that hasn't made you money. So that's in a monthly. So that's why I say to you, your shares, you just leave them and you just buy them and forget them. So it's not a safe haven for me. You know, I don't buy one share as well. I have a number of shares. Now, in the beginning, you can have 3, 4, 5, 6, whatever. But now I have portfolios in South Africa, US, UK, and they're separate. And each one's got a number of shares in it. So not too many, but a number. And they're all different. And I only invest in blue chip shares or shares that are worth something, like Coca-Cola, McDonald's, Nvidia, stuff like that. You know, in South Africa, there's a few retailers, a few banks, you know, and also split it up into commodities, banks, retailers, stuff like that. Split your portfolio up. And then if one sort of has a bit of an issue, the others will cover for it. Bearing in mind that my investments are not leveraged. They're one-to-one, they're spot trading, okay? So, or spot investing, it's $1 for one share, like that's it, end of story. Okay, so that might clarify that question for you and that information. But I just thought I'd let you know on that. That's kind of where I'm going with that. And that's why I don't actually trade shares anymore, because it mixes up with my investing, and I don't want it to mix up with that. It's a separate thing. It's the same as property investments. Don't get mixed up with shares, and they're on their own thing, and they do their own thing, and they make their own, and they get their own value, whatever the case. So, yeah. But go and do yourself a favor. Go and have a look for that video. Go and check it out. And you'll be like, oh, I need to start investing right now. Yeah. No matter how old you are. You know, even if you just want to leave it for your kids. Talking about serious money, yeah. So, yeah, go do it. This trading, that just keeps you busy. That makes you a quick buck here and there. It keeps you ticking over. Keeps you having fun, keeps you going in the markets, keeps you in touch with the markets as well. But the real money is made in the investing. That's where the big money is. The big money is in investing. Time in the market, not timing the market. Nobody can time the market. That's why I designed the system that I show you guys, the strategy that I show you guys, is because I learned that you can't time the market. So what if you can't time the market, how are you going to make money? And the only way to do that is lose less on your losses, make more on your profits. Then it doesn't matter how you time the market. It really doesn't matter, because you're managing your trade. Makes all the difference. It really does. It makes all the difference to your trading. Totally. So, okay. Guys, it's time for me to be on my way. Sorry, I did start late, but I do have to be on my way now and heading on my little merry horse. And I am considering starting the second live show. Guys, let me know if you want it back on Tuesday, if it's important, if we want to go that way. And I'll see about bringing it back. But for the time being, we've got this on Thursday. But I'm thinking of maybe bringing the Tuesday one back as well. Let me know if you guys want that, and I'll have a look into it. But other than that, and I hope you like the format that I brought up today. Change things a little bit and put this down the left-hand side, and, you know, sort of, yeah, okay, something different. Maybe next week it'll be different again. We'll see how we go. But having fun. But yeah, thank you so much for being here, guys. And once again, apologies for the late start because of the internet. What can I do? It's out of my control. Somebody else has got control of my life with the internet. Can you believe it? Guys, thanks so much. And I'll see you guys soon. Have a wonderful trading week further. Make lots of money. Have a good weekend. And don't forget, tomorrow morning I'll be back with another members video. And then tomorrow afternoon there'll be another video.